Hey guys, how's it going? I'm gonna go and set up this room real quick for the group mentoring session, and then we can get started. So let me see if we've got everything all set up here. Looks good. All right, cool. Let me get this link sent out to you guys here in the premium so that we can get started. All right. All right, looks like we're good to go. I'm gonna go and just change this over here. Hey guys, how's it going? I'm gonna set this up real quick and then we can get started. Everything looks good for the most part. All right, I'll get a few minutes. It's 3:58 right now, so it's still and we're a few minutes early. But I'll give it a few more minutes for people to make their way in to the mentoring session. But if you guys have questions, feel free to put your questions in the chat, and then we can cover pretty much whatever you guys need to cover today. Yeah, I'll give a few minutes for people to make their way in because I know some people are still joining and they're waiting for that specific like 4 o'clock. It's only 2 minutes off, so and we'll just see what happens shortly. Let's refresh this, see if there's anything here that's been updated. Not really. Yeah, inflation data is going to come out tomorrow, so we'll see what happens. Probably going to be positive news, but we'll see shortly. Sorry, as I'm messaging some of the members here. All right, so there's only 6 people in the room right now, so I'll give it a few more minutes for people to join in. I mean, I put a poll out there, and the majority of people said they wanted the session today, so hopefully more people make their way in. But if you guys do have questions, feel free to drop your questions in the chat, and then we can go over whatever you guys need help with. So we'll give it a few more minutes for people to make their way in, but yeah, there's only a few people in here. I'm not sure if anyone here has any actual questions or if you guys are just planning on sitting in. If there's not very many questions, I can probably just go over like some of the strategies in detail because I need to make some strategy videos anyways for the new strategies that we've been applying. So we'll give it a few minutes. I don't know, maybe people are just like joining late, but yeah, I mean, it's not really much to look at right now. The market is slow. Market just reopened from the swap. So there really isn't much to look at the moment. I'm not looking to take any trades at all right now. This would technically be a high-low entry. Actually, we entry with all 3 strategies, but it's not one that I would take because market just literally just opened not so long ago. So this right here would actually be an entry for all 3 strategies. The high-low, the pivot, and the intraday, but it's not one I would take. I usually don't. If I was trading during Asia, I generally don't trade until like 5. And it's just too big of a candle too. Like, what we always look for is like when there's a big candle like this, we usually don't take it because we wait for it to pull back a bit. Usually pulls back, and then it either bounces back up or breaks through and continues dropping lower. So yeah, let's see. All right. So I'll give it a few more minutes, or I'll just wait. The session's for you guys, right? So if you guys have any questions, drop your questions in the chat. Otherwise, if we don't have questions, then there's no reason for us to have this this mentoring session. All right, perfect. So Maria wants me to go over the variation. I'll go over that shortly. Let me just wait for a few more minutes. It's 4:02 right now, so I'll just let people make their way in a little in the next couple of minutes or so. And then we'll get started with the variation first, Maria. And I'm glad you brought that up, because that's one that I wanted to go over today anyways, specifically, because a lot of people have been asking about the variation. Yeah, no problem, Maria. We'll go over that right now. Let me just see. Let's just get started. So let's get started, Maria. If people come late, they come late. They'll just go and rewatch the replay. It's on them for showing up late. So let's start with the variation right now. Basically, the variation isn't an official. It's not an official strategy, but it's one that a lot of us have been applying. More specifically, a lot of the the more advanced traders, because for this strategy, you have to be really quick and you have to be looking for the trades pretty much as they appear. I think the one that I took today was like at 8. And I took it for a buy. Let me check real quick. Let's see. Yeah, so I took this trade over here around 8:06 for a buy. 8:06 was like right over here, I believe. Yeah, so let me go ahead and put it over here real quick. All right, so let me just put the requirements right here real quick. I'm gonna close my my chat real quick. So people are just blowing me up right now. It's like weird. We're on this live session, but people are messaging me like crazy on like text and Telegram. I'm just gonna tell them if they want to ask questions, come on the live session, because my main focus is gonna be here with you guys. So, all right, let's get started with this right here. So Maria, basically for this variation, this is gonna be the K2 US 30 1 minute high low variation strategy. All right, so basically for this strategy right here, the first thing that you're looking for is you're looking for to confirm lastly enter. And this is going to vary. We're usually going to be applying this during New York session. I know some people like to apply it during Asia. I don't really recommend it during Asia, but we'll just do normal inner opening candle. We'll just put tentative TP stop, because I haven't really figured out the TP stop loss yet, but I generally use the same as we used for the other 1 minute strategies. So let's see. Nice, Maddie just made it into the room as well. So let me just go over here real quick and I'll show you exactly what I'm looking for. So these are the basic requirements for this strategy, for the variation, Maria. What we're looking for is we're looking to identify the I think that's fine. We don't need to put most recent because we're going to be doing this real time. So basically looking at this right here, If we're looking for the high low, this is going to be the most recent high low, right? And I'll put a line right there. So looking at this specific candle right here, we have this low that's pending. It's not established because obviously, you need 5 candles after for it to be established. It's going to be impossible to establish it when you're looking to take this strategy, because you have to take this right away. It's just a variation, meaning it's like it's a bit of a counter. It's a counter trend strategy basically, because you're not really looking. Well, it works best. Here, let me just put this again. Generally only, so this is where it's kind of a gray area, because the thing is it does work both directions, because you can take them in both directions, but I personally think it works best when you're trading it. Generally only applied in direction of bias. So the reason why I took the buy here was, if you guys remember during the session, I was mentioning that price was going to reverse, right? And I have it drawn up here. This is a clean chart that we drew during the live session. So basically, we are anticipating it to reverse back to the upside. So that's the only reason why I took the buy here, because when it reached 8 o'clock, I already knew that price was going to consolidate and then probably swing to the upside. And that's why I was looking for a buy, because I was already anticipating price to swing back up. Generally, if you're trading like during normal hours, like 6:30 to 8, you want to trade in the direction of the bias. However, for here, it was a little bit different, because the bias was for a sell, but we were anticipating price to swing to the upside. So that's why for this specifically, I was looking for one in the other direction. So basically, just looking at the strategy here, I'll show you one that, sorry, I just got to mute my phone. People keep texting me right now, even though I keep telling everyone that we're on the live session and just asking questions individually. So anyways, back to the strategy over here. I'm going to show you this here, but generally you don't want to be applying this strategy against the trend or the bias. I know that it was a sell bias for here, so this would have been considered a bit of a risky trade, but me and Maddie were watching it. We were anticipating the swing to the upside. That's why I took the trade with him. I think Maddie posted his profits here too. Yeah, or it was in the other group, in the other channel. Let's see. Yeah, so I think Maddie took it and I took it as well. Where's Maddie's at? Yeah, so Maddie took it here for the buy. He locked into profit right there. And I took the same exact one. I took right there. That's my personal 20 bucks. My FTMO 1,400. My MFF made about 1,800. And then my other FTMO made 1,900. So in total, probably close to like 5,000-6,000 across that one trade. But basically, we were both looking for this specific trade here. So I'm just going to show you an example for it here, but this isn't going to apply with the 5th requirement, because it wasn't trading in the direction of the bias. We are anticipating price to reverse. So basically, first you want to look for the previous or the most recent high low. Right here, we have a low that's been established. And then second, you want to confirm a double wick rejection off the high low plus the following candle. So off this low right here, we had a wick rejection off that low, right? The following candle right here, we had another wick rejection. The reason why we also decided to take this trade, me and Maddie, was because it was rejecting off the London low. Basically, when price rejects off these previous session high lows, it generally bounces off. So we had an entry for the variation. We also had a confluence here because it was rejecting off this London low. And with that said, we would have taken, well, we did take a trade here, right there. And we would have rode it up for about 100 pips. So with that said right there, if we let it run, you can see it went straight to TP. And that's a trade that we took there at 8:06, which was the one that I posted for profits right over here. And you can see the timestamp right there, 8:06. So this is an example of variation. Generally, you don't want to trade against the bias, but in some instances like this, where a lot of things line up, then it would make sense to take it. However, I'll show you an entry over here that satisfies the same. Actually, I don't think this is one here. It looked like it from a distance, but no, it's actually not one right there. Let me see if I can find one. Actually, there's one right over here. Right over here. All right, so let me grab this. Where did the thing go? There we go. Move it up here. Let's see. Brian's asking, are the wick rejections called tweezers or no? I mean, you can call them whatever you want. Some people do call them tweezers, but not everybody. So if you call them tweezers, then, I mean, you can call them whatever you like. You know, some people call them tweezers, some people call them double tops, some people call them double bottoms, double wick rejections. It doesn't really matter like the name that they're called. Not everyone calls them tweezers, so I'm not going to say that that's like the official name for it. So I know some people do call them tweezers. At first, I didn't really understand when people told me they were tweezers. I was like, what are you guys talking about? But I could tell now because they're just like, and they're just two lines, right? So they look like tweezers. So you can call them whatever you want, Brian. I mean, some people do call them tweezers. So if that's what you heard before, I know I've referred to them as tweezers, but not everyone calls them tweezers. So it's better to just call them a double wick rejection because some people don't know what tweezers are and they can't identify that as a tweezer. So yeah, equal levels. That's why it's a double wick rejection because it needs to be a double wick rejection off the high low. So I think this is a better name for it, double wick rejection versus tweezers because I don't know, some people, it's funny because sometimes people will consider these, like, let me just take this off. Some people will consider this tweezers right here, and it's not at the same level. And that's, I think that's kind of where you're getting a little bit concerned with as well, because sometimes people will just call them tweezers if they're double wick rejections, but not necessarily off the same price point. So I would just go off double wick rejection, not tweezers, because some people do call these tweezers as well, even though they're not the same size. And it was funny because someone mentioned it to me and they're like, I have tweezers and they're not the same size. And I was like, oh, I didn't even think of that. So I wouldn't call them tweezers. I would just call them, you know, double wick rejections off the high low. So, yeah, but I mean, if you want to call them that, you know, feel free, but they would have to be off the same level because the second requirement here is to confirm a double wick rejection off the high low. So if it's not at the same level, then it's not going to be a double wick rejection off the high low. So here's another example of an entry going in the direction of the bias. And the reason we have a bias here is because price is overall a sell bias, right? Because we have, or I could even show you a better example. This might be a little confusing because it's above the pivots, but we do have one right here that's a little more obvious. So looking at this right here, you can see that we have a high right there, right? So we have a high. First requirement is to look for the high low. Pending is okay. Right here is pending. Obviously, it's always going to be pending because it's not going to be able to be established until 5 candles later. But with this one right here, we have the pending high. You want to confirm a double wick rejection off the high low plus the following candle. So right there, there's a rejection off the high low and off the following candle. With that said, you can enter on the open of the following candle, which would be right here. You go for about 100 pips. You let that run, and there you go, full TP. So it's pretty simple. I mean, it's a very simple strategy. It's the problem with this here is that a lot of people take shortcuts, just like you were mentioning earlier, Brian. People sometimes don't look for the double wick rejection. They're okay with it, even though it's not like off the same exact level. It has to be exactly on that same level. If it's not, then it wouldn't be considered a valid entry. Because what I see sometimes with a lot of people is they'll wait for it, but they won't wait for the candle to close. They'll like literally enter like 10 seconds before it closes, and then like those 10 seconds pass and it goes right past it, right? And it's no longer a double wick rejection. So with that said, and actually, I'm trying to think of another requirement here, because I feel like with me and Maddie, like Maddie is like, well, me and him, obviously, we apply this probably the most out of everyone in the group. With this specific strategy, there's other confluences that are used. We don't necessarily go directly off wick rejection. This is one of the strategies I don't like teaching people, is because it's such a simple strategy, but people mess it up all the time. because they get greedy. They see so many entries come up and they don't want to wait for it to close. Like for something like this right here, sometimes people will see that it gets close to the wick rejection, but it doesn't actually reject off it. And what happens, they still enter it. Sometimes they'll win. Most of the times the trade will win because it goes in the direction of momentum. However, it's not always going to play out that way. So I'm trying to think. I can't really think of any specific confluences that we use aside from avoiding like previous session high lows. Usually not if they're rejecting off, but if it's just getting close to it. Like for example, let's see if I can find one. Like, so we have a wick. So say for example, if this red candle right here closed above this line, and then just using that for an example, if this right here closed above here, where like this candle didn't close below it, then that's one that we would avoid. Because like I mentioned in previous, like usually if you get a rejection off the pivot, it usually pushes off, or not the pivot, but off the previous session high lows, it usually bounces off it. I'll see if I can find a better example here. I don't think we have one anytime recently because it was just this week just started. So see if we can find one here. Actually, we're probably not gonna find any because this is from today. If I see an example, I'll show you guys, but it's going to be hard to find one today because today's the first day of the week. So we're not really going to see too many entries or too many examples of these. Like generally this happens like once the market's like in the full swing. Like today, these came up a lot. There were about, let me just go back real quick. Like during New York session, there was a bunch that I missed myself that I probably should have taken as well. Like there was one right here. There was one right there. There's one, and I'll just show you, like there's one like right here. So you can see there's a low. Double wick projection off it. Could have taken that for a buy right there. That would hit TP. Right there. There was just a whole bunch that came up today. I was gonna take a couple of them, but I just don't want to risk it. But other than that, I'll see if I could find any like good examples for, because I know there's gonna be some that look good, but they get really close. I'm trying to find one that like Brian just mentioned earlier with the tweezers where they're not necessarily at the same level. I don't think I can see any specific ones here. And I was looking at one earlier. Let me see if I can pull it up again. Okay, so that is, there's an entry there, entry there. Let me just move this a little lower. Okay, so this is like an example right here of like what Brian just mentioned about whether it needs to reject off it specifically. So looking at this right here, this is these are both actually really close. So this one's actually closer. Like for this one right here, price it didn't reject exactly off it, but it was like slightly below it. So when I see a lot of people in some instances, they'll see something like this and they'll just enter it without even confirming the second requirement. And what happens is in a lot of instances, it'll hit, but you know, it only hits so many times until your luck runs out. So like right there, it does hit. I'm trying to figure out, see if I can find another one. I don't think I see any over here. Again, right here. So here's another one where it gets close to it, but not close enough. Because me and Maddie were watching these earlier, and there was a lot of entries that were coming up like this, where they get really close and then they just don't play out. But you know, in a lot of instances like this, people will just take the trade. And it's kind of hard to see when we're going back in time because it doesn't show you real-time movement. But if you're watching this real time, like for me and like a couple other people, when you watch it real time, we're like literally watching per second as it moves around. And I think like this was like literally like right here. Like it was at that top point, and then at the last second it just dropped. So it looks here like it's a clean rejection, but if you're watching it real time, it doesn't necessarily look like it closes like this. So this would be another one here where like some people would take a shortcut because price was technically up here, and then at the last second price dropped and they would have entered the sell already. In a lot of instances, it'll play out like right here, it does play out, or it doesn't. See, like right here, it doesn't. So here's an example of like where I would where people would take the shortcut and not wait for the candle to close, and they would just enter, and then it, obviously it doesn't play out as it's supposed to. I'm trying to think of any other ways that people take shortcuts, because there's a lot of ways that people take shortcuts, and it's really simple to get caught up in those shortcuts. I can't think of them right now. So if anyone has any questions regarding variation, you guys can like bring them up, and then it'll probably spark my thought process with like a lot of mistakes that people made. Because with me and Maddie, we've been testing the strategy for like a couple months now, and it works really well. But as I've been mentioning to you guys, it's not one that I like to openly teach to people, because it's very risky. It's a very lucrative strategy, but there's a lot of room for mistake, especially if you guys aren't patient and waiting for the actual candle to close. I don't think Rick's here. Yeah, like Rick was taking a lot of trades where he doesn't wait for the candle to close. He takes it like 10 to like 30 seconds before the candle closes, and then it doesn't close where it's supposed to. Brian said, do the pivots have a role in taking the trade or not? So most of the time not, but it just depends on, because like for these variation strategies, they happen so quickly. Like these literally will like pull back, and then they'll go back into they'll pull back to where they're supposed to go. Because like for Maddie, I think, well, most of the time when Maddie does it, he doesn't necessarily trade in the direction of the bias. So like for here, the fifth requirement, I put generally only applied in the direction of bias. That's because it isn't always applied in the direction of the bias. And I can show you an example here. Like for example, right here, this isn't in the direction of the bias, because the bias right here is a sell, right? Bias is a sell, so generally in a lot of instances, you're not going to take a sell. You're not going to take a buy here. But looking at the requirements, all the requirements are met, because you have a wick rejection off this low, and the following candle, same wick rejection. So with that said, you could technically take this for a buy if you're just disregarding the fifth requirement, which a lot of people do, because this movement happens so quickly that you can still make profit off it. But the thing with this is like another reason why people take shortcuts, or not really shortcuts, but don't follow directions, is that they don't set the right TP stop loss. Like what they do is they get greedy. They see price go up and they're like, oh, this is probably going to reverse. So they don't exit there. In a lot of instances, it'll push up a lot higher, but not always. So short answer to your question, Brian, is that it has a role in taking it, but it's not exactly necessary, because I mean, this is a different type of strategy. This is a counter trend strategy, so you're basically looking for it to go against the trend. That's why it's a variation, because the high low, you're going with the trend, you're going with the bias. Variations because it's going opposite. So you don't technically need it, but depending on like how probable you want the trade to be, obviously you want to trade in the direction of the bias. So it just really depends, how you're doing it and if you're doing it properly. Because the problem with a lot of other people like who apply it, not just this strategy but most of the strategies, is that they enter without any actual analysis, right? Like Jermaine, yeah, like Jermaine said that's been him lately. Like for Jermaine, he's like entering trades, but not necessarily, analyzing the trade fully. And a lot of it could be a lot of reasons why people are doing that. Like Jermaine mentioned to me that he was like trading on his phone and he had like a lot of different things going on, so he couldn't really analyze it completely. And I never recommend anyone to trade like that, right? I know a lot of instances people just like they get excited and want to take the trade right away. But if you're not analyzing the trade, you're basically just gambling at that point, because you're trading with no strategy. You're trading with all emotion. So and it's fine. It happens with people sometimes. If you see a lot of people profiting, you just want to, you get that phone and you just want to hop in the trade, even though you haven't really analyzed it yourself. So for me personally, I wouldn't recommend people just taking random trades like that. Or and the reason why we took the buy here. So let me go back to the trade that I took earlier at 8 o'clock. I explained it earlier, but a bunch of people did make their way into the room. So let's see. Going back to 8 o'clock over here, it was like at 8:06. So we're winding it back to 8:06 over here. So looking at the bias here, the bias here was for a strong sell. However, the reason why me and Maddie took this trade right here was because we had different confluences, right? If you guys have the confluences, then that's great. You guys can take the trade, but you shouldn't just take it just because you think price is going to go up. The reason we knew price was going to go up, because this entire session we already anticipated price to go up, and we actually knew what we were doing with regard to this entry here. So this regards the fifth requirement here. But the reason why me and Maddie knew that this was going to come up was because we had an entry here for a high low. We also confirmed that price was rejecting off this London low, and then going back to our analysis from that time period right here during the live, like I literally didn't change anything on here. And it's crazy how like this played out perfectly. Like if you guys go back to the live session from today, I drew all this stuff up and it played out perfectly. Let me see if I can even pull it up for you guys, because I'm like kind of shocked too that it played out like this. I was expecting it to play out, but not necessarily as perfect as it did. So let me see if I can pull it up over here. YouTube. All right, so this was a live session from today. And let's see if I can find it over here. Yeah, so you guys can see if I can pull it forward a little bit. Wait, sorry, guys, this is from today. This was from the other day. This one was from today right here. All right, so going to the markup over here. It was like one where I didn't have any writing on it. Okay, so this we literally drew this up on the live session right over here, right? The same markup right here, and it played out exactly how we anticipated, which is like crazy because it did exactly what we anticipated. We had price go down. We said it was going to consolidate a bit, push up a little bit, then consolidate, and then do a full reversal. And that's exactly how it played out. So going back to right here, we went off the live session on 8. We were already anticipating it to go sideways and then shoot back to the upside. And that's the reason why we were looking at this trade right here. Because around 8 o'clock, you can see, if I go and just rewind this over here, so like 8 o'clock or 8:06 over here, like we were already anticipating it to swing up. So that's why when we saw this here, we saw the variation, we saw it reject off the London low, and then that's why we took it there for a buy, even though generally we don't trade in the direction against bias. However, for this specific trade right here, we already anticipated it. So when we took the trade there, it went straight to TP. So as you guys can see, there's like different ways to analyze it and decipher, what's risky, what's not. For this one specifically, we're already anticipating the reversal. So that's why we decided to take it. Let's see if I can find, because I'm pretty sure I went over it before we got off the live session. And it was like towards the end. Okay, so you can see right here, like literally, if you watch the live session right here at the end at like 50 or something like that, like literally right at the end, you guys can see right here that I drew this up and I didn't change anything. I drew this up before it happened, and looking at the chart over here, it did exactly what I drew up um, right over here. So I mean, it's pretty crazy how it played out perfectly. Like this drawing right here, and then looking at the actual like you can see right here, I literally do the same thing. And then looking at the chart here, it played out perfectly. So this is the only reason I knew this was going to happen is because this pattern plays out almost every day. It doesn't play out every single day, but a lot of the times it does play out. So, you know, if you trade something enough times every single day, you'll see these same patterns play out. So I already anticipated this to come out and it came out perfect. I kind of wish I took the trade because if I did, man, I would have made some like massive profit off that. Because the thing is, if I caught it from down here, and then I wrote it back up to opening price, that'd be like 1,500 pips right there. Super heavy. Exactly. Yeah, Maddie said at 1041 buy, write it up for the reversal. So Maddie did see that trade over here at 1041. Let's delete this stuff. Right over here. Yeah, Maddie said at 1041, which was I think it was like 1041. Oh yeah, this one right here. Yeah, that would have been nice. So as you can see, like a lot of these strategies line up with each other. Not this specific strategy here, the variation, but applying the other three strategies that I look at, the high low, the intraday, and the pivot scalp. If you were to take this high low entry right here, right there, just fix that. Then you literally could have rolled this up to either opening price, which was set at 35,805. 35,805 for about close to 1,000 pips. Or, I mean, you could have wrote it to the next New York low right here. So, I mean, either way, if you took that or the other, it would roll all the way up there. Yeah, because I know Maddie was continuing to watch the charts. I didn't watch it the entire morning. After like I took that first trade, I kind of just logged off for the rest of the day because the market was moving kind of weird. But yeah, I mean, it played out perfectly off that one. So yeah, that's it for the variation. That's it for this entry that came up over here. If you guys have anything else that you guys want me to cover, go ahead and put it in the chat. Otherwise, you know, I have nothing really in mind to cover today unless there's something that you guys want to cover. The main thing that I wanted to cover today was a variation. And I showed you guys a couple of examples here. If there's something that confuses you with the variation, let me know so I can go over it in detail. But yeah, I don't have any specifics that I wanted to cover today. You know, it's funny, the person who asked for this mentoring session isn't even here. So unless you guys have questions, it's not really too much for me to cover today. So yeah, I'll sit around and see if you guys have any other questions. Otherwise, let's see. Otherwise, I think this would this would be pretty much all that I wanted to cover today for the most part. Check the message real quick. Man, I hope I'm not getting sick. I feel like I'm getting sick. It's freaking COVID stuff going on. I don't know if you guys saw it. For you guys here in California, we gotta wear masks again, which sucks. I don't know if you guys saw the news, but I think they said on the 15th, they're gonna require that we wear masks indoors again. Let's see, California. Yeah, which sucks. Yeah, I literally just got the update right now. we're gonna have to be wearing masks again on Wednesday, right? So at least like about a month. Yeah, it's gonna suck. Whatever, it is what it is. So yeah, guys, if you guys have any other questions, feel free to put your questions in the chat. Otherwise, I really don't know what else to cover today. This session is for you guys. So if you guys have questions, feel free to drop your questions. There's nothing specific for me to cover. I can cover specifics if you guys have any topics that you want me to cover. But other than that, I don't really have anything in mind to cover today because I'm not sure what you guys need help with. There's a wide selection of things that we can cover. There's a lot of different strategies we can cover. Confluences, anything like that. But I can't pinpoint what you guys want to learn unless you guys drop any questions in the chat. So we've been on the session for a little over 30 minutes. Yeah, I'm gonna sit around until you guys drop questions. Otherwise, I don't know what else you guys want me to look at. Maddie said high low and how you know which ones are good entries. So for the most part, Maddie, similar to what you looked at earlier. So you were talking about that trade at 10:30. Just go back over there real quick. Yeah, 10:41. All right, so going back to this one right here, the one that Maddie referred to earlier. As most of you guys know, I'm looking for triple confluences in the market. So I'm not really looking for just one strategy anymore. I'm looking for 3 to line up. And the reason for that is because of the way that the market's currently moving, right? The market's very choppy a lot of the times. We're still able to identify when certain direction is established, but for the most part, just looking at the market, not just today, but in general, it's just been a lot. It's been a lot more choppier than it has been in the previous months. Sorry, I keep picking the wrong one. There we go. So, all right. So looking at this right here. Yeah, no, D, I got you. I saw your message right there. So D wants me to take a look at the high-low scalps. So I'll go over the high-low scalps. I'll go over it with the confluence because this is going to line up with your question, indigenous, and it's also going to line up with your question too, Hassan. So let's see. All right, so we have those questions there. Basically, this question is for Maddie, Hassan, and D. Basically, all three want me to go over the high-low scalp entries. And on top of that, I'm going to show you exactly like which high-low entries that I'm necessarily looking for. I'm not necessarily looking for just the high-low entries, but I'm looking for the entries that line up with all three strategies. So let's get started with this. 1 second, let me get some water. All right, cool. So for this high-low scalp strategy, what you're looking for is you first want to identify the previous swing high and the previous swing low. So looking at this right here, from this candle right here, you can identify where the previous swing high and swing lows are, right? I'm going to turn off this indicator to clean it up a little bit. And in order to do that, you go back and look at the previous swing high and you look back at the previous swing low, which is right here. In order to establish the previous swings, you have to confirm that 5 candles have closed past it. So with this high right here, there's 1, 2, 3, 4, 5. 5 candles have passed. So with that said, this has been established as the high. Same with this low right here. You have to look for 5 candles after it. So this candle right here, 1, 2, 3, 4, 5, there's been 5 candles. This is the established high, and this is the established low. With that said, that's going to be requirement number 1. You've confirmed the previous swing high and the previous swing low. Once you confirm that, you want to confirm a price break you want to confirm price break and close past the previous swing. So right here, we have the swing high. This candle right here breaks past it and it closes past it, right? It doesn't just break past it, it also closes past it because you can see that the candle closes right past that line. So with that said, that's gonna be requirement number 2. So we have requirement number 1 met right here, requirement number 2 met right here. Third, you want to confirm the direction of momentum. So we do that by turning on the momentum indicator. On the specific candle right here, we have a buy signal, right? So with that said, we have requirements 1, 2, and 3. The fourth requirement is that price is not ranging or consolidating. Right here, price was in a range. So let me just hide this again right here and hide the pivots. Price wasn't, and I'll hide the high lows too. So looking at this chart here, before price broke past this line right here, price was in a range, right? Because price was bouncing back and forth within this area right here, sideways. So with that said, you can confirm that price is no longer ranging or in consolidation, because in order for it to be ranging or consolidating, price would need to be within this area. Price closed, it broke and closed outside of it. So with that said, it's no longer ranging or consolidating. Lastly, you just want to confirm that price hasn't touched the previous swing before the break and close. So all these candles from this high up until now, price has not touched it, right? So with that said, this would be a high-low scalp. However, even though this is a high-low scalp entry, this isn't one that I necessarily take on my own. This is one that I use as a confluence. If I have this entry here, then I also want to confirm that I have an entry for the intraday strategy and for the pivot scalp. So looking at this right here, in order for me to have an intraday strategy, qualified entry, you want to make sure that you have a valid K2 momentum signal. Right here, we have a valid buy signal. And second, you want to confirm that the trend meter matches the signal. So the trend meter is green, the momentum signal is green. With that said, this is an intraday, entry right here. So this would be a high-low scalp entry. This would also be an intraday entry because both of the requirements are met for both strategies. The third one that I'm looking for is to confirm that the 1-minute pivot scalp strategy also is available here. So basically right here, you want to confirm that we have a valid K2 momentum signal, which we do. We have a valid buy signal right here. And second, you want to confirm that that price is above the K2 pivots for a buy. So with that said, price is above here, pivots are down here, and that would qualify as an entry for the pivot scalp. So by applying all these 3 strategies on one specific candle, that's going to give you a triple confluence, right? Because you have an entry for 3 different strategies. These aren't the same strategy. They're kind of similar in some instances, but they're not because you're looking for different requirements. So if you were to count these by individual confluences, you have a momentum signal, right? That's 1 confluence. You have the trend meter matching it. That's 2 confluences. You confirm that price is above the pivots. That's 3 confluences. You confirm that price breaks and closes past previous swing. That's 4 confluences. You confirm that price is breaking out of the range of consolidation. That's 5 confluences. You confirm that this specific price point hasn't been tested in the past, right? That's 6 confluences. You confirm that price is no longer ranging or consolidating, or it's breaking outside of the consolidation. That's 7 confluences right there, guys, right? So if you have 7 confluences, the trade's probably going to work, right? Like you guys can just using your common sense and basic logic. If you have so many things that are pointing in one direction, odds are price is going to go in that direction. So that's the specific reason why I look for all of these 3 to line up. I know there are 3 different strategies, but if you break them down by confluence, you have like over 7 confluences for this very one candle, indicating that price is going to swing to the upside. So if I was to see this right here, which is basically what I'm looking for, I would take this for a buy. And with that said, you can either go for the normal TP, or you can go for a bigger move. It's just really up to you. For me, I go for a bigger lot size and I go for a smaller move here. So if I was to take that trade, you can see right there, it kind of just goes back and forth for a bit, but then it does hit TP. And then if you were to ride it longer, it goes up even higher, right? Because we have all those confluences that line up on that one specific candle right over here. So this kind of shows you why I'm looking for these three confluences, because I'm looking for quality over quantity, right? If you're looking for quantity, you can find a bunch of trades here. However, they're not going to be as good as this one entry right here. You know, I'm basically looking for this one entry pretty much every single day. It doesn't come up just once a day. It'll come up a couple times a day. So like for me, if you've been following me for the past, I mean, I don't know how long now, but if you guys have been following all my trades, I only take like one trade a day, 1 to 3 trades a day, but they always hit, right? So like I mentioned, I take bigger lot sizes. So right here off this account, I made about close to 2,000. Same with this one. Same with this one. And my personal, obviously it's a lot smaller. But you can see that this is just one trade, and one trade pretty much added up my profits to, let's see, right here, 1,800 or 1,935 plus 1,860 plus 1,485 plus my personal account, $20.19. So for this one trade here, this is how much I locked in. And this is just me being patient, waiting for those perfect entries. If you guys can take one trade like this every single day, or not even every single day, like a couple days a week, I mean, your account will just keep growing, right? If you guys have seen my profits, like pretty much for the past couple months, I'm only taking like one trade, but they're like for good profits. You'll see a lot of people who will, like, not necessarily in K2, but just in general, some people who will take like 20 trades, right? And barely make as much as I'm making off one trade. You know, if you're able to pinpoint those perfect entries, you guys can make a massive load of profit. Like for right here, right? I took 3 trades this day. This is how much profit I made on that day. And I'm barely losing because I'm not really taking too many trades. I'm taking the trades that I know are like almost guaranteed to hit. So, and the thing with this too is like some people will complain and say like, oh, well, I'm trying to pass my challenge. Like, okay, I get it. If you were to take all wins here and not have any losses, then you would still pass your challenge, right? What happens is a lot of people have a couple wins and they'll take a bunch of risky trades and they'll just go back in a circle, right? They'll go up, they'll go back down, go back up, go back down. For me, it's just going up, 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 because I don't take any losses. You know, but for some people, you have to like take losses to actually understand that the real thing with trading, or like in general, not just trading, but like with managing your risk, it's about managing your losses, not really about managing your wins. It's more so about managing your losses. And some people just, they can't get their head around that, which, I mean, hopefully eventually, you know, if you're in that position, you'll understand that that's the main thing with trading. It's about lasting in the game long term, rather than, you know, making a bunch of profit one day and then losing it the next day. So other than that, let me see if there's anything else I missed here. I think I went over pretty much everything with this right here. So Maddie, if there's anything else you want me to cover regarding the high low, let me know. I'll see if I can find another one, but I think that was, I didn't really see anything else today for the high lows. One thing that I would recommend though, is even if you get a high low entry like this, one thing that you would want to look out for is to make sure not to take trades that are, or you don't want to take entries where the candle is like super huge, right? Like, let me see if I can find one here. Like this one right here. Okay, so this is one that I wouldn't have taken. I just want to show you guys right here as an example, because I did see this one and I was tempted to take it because it did fit the requirements. However, this candle was huge. So, you know, comparing this candle compared to the candles before it, this candle is so big. It might not be big like pip wise, but it's about like 35 pips. So if you measure this next to the candle right here, this is double this candle. This is like triple this candle. This double this one, double this one. If the candle is huge like that, you know, what usually happens when you see a big candle like that is that it's going to have to pull back a bit. So For me personally, I would not have taken this trade right here, even though it fit all the requirements. So looking at the three strategies here, these still would, it would qualify for an entry using all three strategies. We have a high-low scalp because we have, let's see, one. Actually, I take that back because it touched the pivot right here. So this was no longer low. So never mind, I scratched that. But this is one thing that you want to look for. If you do see an entry with all three strategies here lining up, you just want to make sure that the candle there is not too big. Yeah, my bad, guys. I was looking at this earlier and I was tempted to take it, but then I realized that, never mind, it wouldn't be an entry because it wouldn't fit the fifth requirement right here. Confirmed price has not touched previous swing before breaking close. So looking at this right here, this is the low, but it's already been touched twice before price reached that point. So it actually wouldn't be an entry. So other than that, Hassan said, I think Asian market will work best for me. I wouldn't recommend doing this during Asian market, Hassan. I don't trade Asia anymore. So yeah, my advice to you is to not use it during Asia. I mean, you can probably use it, but you have to figure out, you have to go for a smaller TP, which is not really going to work depending on your broker because your spread's too wide. So if you're trading during Asia where the market's like half as slow, if not slower than New York, you're not going to go for 100 pips. You're going to go for like about 50 pips. And the problem is if your spread is like 80 pips, it's going to be literally impossible for you to reach those, like to really make any real profit off the trade. So I wouldn't recommend using it during Asia market. I mean, you can test it on different assets, like probably use it on an Asian asset like the JP, but I wouldn't recommend. Well, I haven't done it, so I can't really tell you whether it's good or not. But I can pull it up for you and let's see if we could find something. All right, let's see if I could find one here for you. And the thing, if you're playing a JP, I don't know what the like your TP would look like. So I'm not sure if it'd be like 100 pips. I don't even know what the spread is. Spread is like 80, I think. So let's see if I could. I'm trying to see if I could find an entry here for you off the JP, but I don't know if I'll be able to find one. Yeah, Asia session just opened, so there's not really anything for us to look for here. Let me go to like a previous day, not today, but Asia session of like last week. Yeah, because you guys got to keep in mind that these strategies are meant for New York session. There's a reason why I stick with New York session. I only trade from 6 to 8, sometimes a little bit after that, but I don't trade Asia session and I don't trade London session because those strategies aren't meant for those sessions. I do see a lot of people try to use it during those sessions, which is fine. But you guys got to make sure that you guys have actually tested it yourself and you guys know that it actually works. So I can't give you guys the okay whether it works or not because I haven't used it myself. If I have, then I can tell you guys whether it works well or not, but I haven't. So I would like for the most part, I would tell you not to use it during those time periods. But let me see if I can find something here off the JP. The 9th, I think that was Friday. That was Thursday, actually. Okay. So Thursday night, which was here, let me see if I can find something over here. All right, this Thursday night. Let me just go and rewind it to the specific period over here. All right, let's see. No entry off that. No entry off that. Nothing there, nothing there, nothing there. Okay, so here's an example right here. Using the, or here's a better example right here. All right, so using the same strategy here, and this is just, just a reminder, I'm not recommending you guys do this. This is really, you have to go and back test it yourself to see if this works. Like I don't trade during Asia, so this doesn't really benefit me to back test it myself. If you guys want to use this during Asia, you guys can go ahead and try it. But I would recommend you guys practice on your demo first, or back test it as much as possible to figure out whether it's consistent and to figure out what the TP stop loss should be. Because this strategy is meant for US 30, it's not meant for anything else. Even though it can be applied for other assets, it's not necessarily one that I would recommend, because I only recommend things that I have actually tested and that I know work. So looking at this right here, for this sell signal right here, we have price breaking and closing past this low right here. So with that said, we confirm this low, we confirm price break and close past it right here. We confirm that we're trading the direction of momentum because we have a sell signal. We confirm price is not ranging or consolidating because this would be the range right here. Price is broken outside of it. And then lastly, you want to confirm that price hasn't touched this previous swing before this break and close. So with that said, this is an entry for the pivot for the high-low scalp. This is also an entry for the pivot scalp because we have a sell signal that's below the pivots. And lastly, we have an entry here because we have a valid K2 momentum signal and the trend meter matches it. They're both red. So with that said, you would take this for a short position. I'm not sure what the equivalent would be for JPN versus US 30, but for this right here, I'm assuming it'd be, I'm thinking about the same. So if you were to use something about the same here and you let it run, you can see that it still works. But this is only one example right here. Like you would actually have to go back and back test it like so far back as far as you can to confirm that it actually works here. So, I mean, a lot of people try to trade during different sessions, but it just doesn't make sense for you to trade a different asset that's not open during that session because your spread's going to be so wide, especially if your margins are so low, right? So if you're going for 100 pips and the market's not open for that asset, it's probably not going to reach 100 pips. And by doing that, you can just look at current price. Like look at current price right here. So market has been open for about 2 hours now. So if you look at the range right here, price has barely moved at all, right? It's just going sideways. So it doesn't make sense for you guys to be applying these strategies when price isn't moving, because these are all like, these aren't ranging strategies. They're directional strategies. So Hassan, if you want to apply this, you can go back and back test something that's open during Asia session, which would be the JP 225, which is basically it's not the equivalent to US 30, but this is the Japanese index. Not the index, but the Japanese stock index. Basically, you know, their top 225 stocks in Japan. It's like the Nikkei 225. Other than that, I know there's like the Aussie 200 as well, but I don't think this moves as smooth either. So let me just go here and see if there's anything that you could have entered here. No, that was true. Yeah, you have to go back and just actually back test this to figure it out, because it just doesn't make sense to trade US 30. I know I used to trade US 30 for a bit, but like, trust me, I was stressed out trading US 30 during Asia session because the spread is so wide, especially if you're using like MFF. It's like impossible to trade on MFF because your spread's like 300 pips and you're going for like 50 to 100 pips. So you technically have to go for like 400 pips to even pull out your profit. So I personally don't recommend it. I mean, you can still do it if you want, but I just, I feel like it's not really worth it at all. Oh yeah, so Hassan said that makes sense. I've been trading US 30 during Asia session and it drives me crazy. I agree, Hassan, 100% with me too. It would literally like stress me out so much where I'm like, I would regret entering the trade before entering it, because what would happen is you would go to US 30, right? And I'm just going to show you how crazy it is. So like, let's see, I'm going to see if I can find an example here. Okay, so this might be, I mean, it wouldn't fit the requirements, but Okay, so basically, I'm just going to use this as an example right here for an entry. Not saying that this is one I would take because it's obviously one that I would for sure would not take because it's during Asia session. But I'm just going to show you the craziness of this. So in order for you to take a trade here, I don't know if I can find the spread for MFF, but I know it's like, it's really, really wide. It's like 300 pips. So for this right here, if you were to take this for a sell, like normally you would go for like 100 pips, right? Like right there. But since it's Asia session, you would go for something smaller. You go for 50 pips. So this would be your target here. But the thing is, if you're trading on MFF or your spread's so wide, the spread is like, it's like at least 260 pips. Like at the very least, because I've never seen anything lower than that. But if this is your spread right here, you won't make any profit until price passes that point because you got to cover the spread first. So in order for you to get out of this trade, you would literally have to be all the way down here. Like, I don't know if you guys can see how crazy this looks, but literally price could go this far down and you'd make no profit until price gets past this and then goes into profit. So this is why I don't recommend trading US 30 during Asia session, and especially don't trade it if you're trading on MFF, because MFF their spreads are like insane. It's like super crazy how wide they are. But yeah, for example, if you were to take this trade here, you see how far opposite it would go. If like you didn't have to cover this spread here, you would have hit your TP, right? But since you have to cover your spread, you like literally would not make any profit. Like you'd see this is what would happen on MT4. You would see price going down, passing your TP, and then not triggering it, and then going all the way back up because of the widespread off MFF. So this is the main reason why I don't recommend trading during Asia. The strategies still do hit during Asia, but it makes it literally impossible to actually lock in some profit due to the fact that the spread is so wide. So definitely something that you probably want to avoid, Hassan. So if you want to trade during Asia session, because you did say it's like, you know, your best time to trade, it would probably be a different asset, not US 30. But you just want to make sure that you go and back test it first before you actually apply it on your real account. So hopefully that helps. I know it's probably not the answer that you were looking for, you know, for a US 30 during Asia, but even myself, you know, if I've stopped trading US 30 during Asia, you know, there's a good reason for it. Because the thing is, I want to keep making profit, but it makes it nearly impossible for a lot of brokers. Unless your broker just has like a flat rate and it's always going to be tight spread, but odds are you're probably not going to find one that has one with spreads tight enough to cover these quick scalps. Let's see. Other than that, let me see. There's another question here from Brian. Let's see. All right. So Brian said, can you show a variation going into drawdown? I don't think I've seen it go that way. For that reason, what's your opinion on a tighter stop loss? So the problem with that, Brian, is that you're not going to see the ones that go into heavy drawdown unless you're looking at it real time. Because the problem with the high lows is that these high lows get established 5 candles after, right? So all of these high lows are going to look good. If you see any variations back testing, it's always going to look good. And the reason for that is because it doesn't take for account the high lows that aren't actually established, right? So in order for you to determine when trades go into drawdown like that, you would have to look at it real time. Because the thing is, let me just go here real quick and I'll show you. Let's see. Okay, we'll go over here. So let me just show you, for example, over here, Brian. Okay, so let me see if I can find one here. Because the thing is, these high lows keep getting pushed back until they're established. Let me just show you over here real quick. And this isn't going to be an entry. I'm just showing you like a really bad example just to show you that these lows aren't always going to be established. So let's take this off. Okay, so for example, right here, you have this low right here, right? And this is why I don't really backtest, because the thing is when you backtest, you don't get like real results. Like you don't get real testing done because you're looking for those perfect entries. Every time you're looking back, you're looking for something perfect. This is why I test everything, even the new strategies that we apply. I do it live with you guys on the live session because it tests your emotions and it pushes your trade psychology to make moves under pressure. So like looking at this right here, Brian, you can see how this low is established, right? It's not established, but it's pending. See how that low disappeared? Not that this was an entry, but the thing is, if you were to take this trade here because you thought that that low was established, you'd go into some massive drawdown, right? Because you keep thinking that there's a low there, but there's no low because the low hasn't been established yet. Let me see if I can find an actual example. It's just going to be kind of hard because you have to actually follow it. That wouldn't be it because price broke below it. But you can see that how these lows get, like once they get invalidated, it disappears. So that's why you have to kind of forward test a little bit. I'm just trying to see if I can find a one of those variations that it's just kind of hard to find unless you're looking at it real time, because you're like looking for these specific. And this is another reason why I don't like, okay, so this is probably one right here. No, it went a little bit below it. So not that one. And this is another reason why I don't like teaching this strategy to people, because they don't understand that the lows can keep pushing. Like it looks like a perfect strategy from bird's eye view, but realistically, it's still very risky because you can't really confirm that the high lows have been established, or not established, but used for the variation, unless you're actually looking at it real time. And that's why the stop loss is still important to have kind of wide. So I think, well, this would have been a good entry though. I'm trying to find a bad one. So like, it's kind of hard to find bad ones because this strategy is so good already as is. Like for example, right here, there's another variation right there, right? You could have taken that and that actually would have hit TP. This is actually like variations that I was looking at this morning. So that's a variation right there, full TP. Let's see. It's not a variation. Okay, so this is a variation that I took. That's gonna hit TP2. That's one that I actually took myself. But yeah, it's kind of hard to point out unless you're actually looking for it, Brian. But you kind of get what I'm saying, right? Like these lows keep getting pushed farther and farther back. So it's kind of hard to tell when, because what happens sometimes is you'll get a tweezer or like, whatever you guys want to call it, you'll get a double wick rejection, but then price will continue dipping or it'll continue pushing up. And that's why it's important that you guys have the momentum indicators so that you guys can identify when price is actually going in that direction, like for an extended period. Yeah, I can't really see any here because this is a brand new week. I think during the week, Brian, we can probably look for more because we have a lot of news this week. You're going to see a lot of spikes back and forth. But currently right now, it's just it's not feasible to find one of those entries. Or maybe here. I don't know. Let's see. I think the time to find those bad entries would be during Asia session because the volatility is so low. Okay, like for this one right here, for example. Okay, so this right here, and this is during Asia session, so I wouldn't even be taking this trade to begin with, but this would be a variation here for a buy. And you're asking like, why don't I have like a tight stop loss? In a lot of instances, you can probably put your stop loss right below the low, because if price goes below it, more likely than not, it's just going to keep pushing that direction. So you can see right there, it would have stopped you out. And then it would have just dipped lower. But here's the reason why I have my normal stop loss is because if you did, you would have been able to survive the move, right? So you still would have hit your TP right there. So there's different ways to do it. If you want to have your stop loss tight, you would have gone stopped out right there. But if you would have used the original stop loss, you would have survived this drawdown, and then you would have hit your TP eventually. So yeah, it's just risky when you have it that way, and it's better to have a safety net, especially if you're applying a high win rate strategy, because odds are if you just trust the trade, it'll play out how it's supposed to. But yeah, other than that, let's see if there's anything else there. Definitely no problem, Brian. So got you with that. Hassan's asking, cool, it helps when you're scrolling back on the chart looking for an example. What are you looking at? You scroll back pretty fast, so I'm trying to see what you're thinking. I'm looking for entries, Hassan. So the thing is, once you're good at applying these strategies, you can find entries just by looking at the chart. It's not that difficult, right? If you look at the strategy here, there's only so many requirements. Like if you're looking for a high-low scalp, the main thing that you're looking for is for price to break and close past the previous swing. So if you're looking back right here, there's a swing right here, right? Is there a break and close? No. So you just keep going. There's a swing right here, right? Like I'm like literally just pointing stuff out. See how there's a swing right here, a high? See how there's a break and close right here? That's what I'm looking for. Like when you get good at applying these strategies, you don't really think about it. You kind of just look and you can see that there's an entry right there. So without even thinking about it, I saw that there was a higher here. I saw that price broke and closed past it right here. The one thing that I didn't confirm was whether there was a momentum signal, which there wasn't. So this would be a high-low entry, but it wouldn't be an entry for the intraday or for the pivot scalp. If I'm looking for a pivot scalp or a intraday entry, then the main thing that I'm looking for is going to be a momentum signal, because that's going to be the first requirement, right? So for the intraday and pivot scalp, you're looking for a valid K2 momentum signal. So if I'm looking for an entry, I'm looking for a momentum signal that breaks and closes past a swing high or a swing low. So if you're looking to back test stuff, that's what you would look for. If you're looking for just a high low, you're looking for price to break and close past the high low. If you're looking for an intraday strategy or pivot scalp, you're looking for a valid momentum signal. So, I mean, it just depends on what you're looking for, right? These strategies are very simple. Like there's two requirements here. So there's not really much for you to look for. For intraday, you're looking whether the momentum signal and trend meter match. And then for the pivot scalp, you're just looking whether you have a momentum signal that's below or above the pivots. For the high-low scalp, it takes a little more work, but once you're able to look for specific things in the market, that's what you'll be looking for. So other than that, I think that's it. I don't know if you guys have any other questions, feel free to drop your questions. Otherwise, we've been on the session for about an hour and 15 minutes. So I think this might be it. I was only planning on being on the session for about an hour, but obviously I want to stay on this and answer as many questions as possible. So if you guys have questions, drop your questions right now. Otherwise, I think this will be it for the mentoring session. And just keep in mind, guys, if you guys haven't had your questions asked, you guys can always ask me during the live sessions, or you can ask them next week for the next mentoring session. Let's see, next week is Christmas, so I don't think we will be having a mentoring session, but I'll try to see if there's a day that we can have it on. Definitely. One more question from Hassan. So Hassan's asking, okay, so count 5 candles past the recent swing higher, swing low. Does this include the candle that is the swing higher, swing low? It doesn't include it. So for the requirement right here, you want to confirm that 5 candles past to establish. So that would be 5 candles after. So for example, right here, we have a high 1, 2, 3, 4, 5. So 5 after it. Before we were using 4 to 5, but I think 5 is a better number to establish it as an actual high swing, like a swing high or swing low. And the reason for that is because this is on the 1 minute chart. So each candle is 1 minute. So if you have a swing high and then price hasn't broken it in 5 minutes, obviously it's probably going to be the established swing high. But if you have it where it breaks it like right after, like 1, 2 candles, odds are it's probably not going to be the swing high, and the next one's going to be the actual high. So yeah, I think that's it. So, all right, guys, I think that's it for the session. If you guys have any other questions, feel free to reach out. Otherwise, we'll be holding another session hopefully next week. I'll see if I could do it. I can probably do it next Thursday, the day before Christmas Eve. So I'll put up a poll to see if you guys want it next week. Otherwise, we'll hold it the week after that. But yeah, other than that, guys, I think that's it for today. If you guys have any other questions, feel free to reach out. Otherwise, you guys can ask me questions in the live session tomorrow, or we can wait till next week for the next group mentoring session. So other than that, guys, have a great rest of your night. I'll give you guys an update, and then we'll meet back tomorrow morning for the next live session.